All right, we're going for a walk today. We're waiting for the Fed minutes to come out tomorrow. Now the Fed minutes keep coming out, and every single time this is coming out, everybody's going to blast us on our lives saying, well, where do you know? Where do you think it's going to go? Is it going to be 0.75, 1%, 1.25%? And really, I ask, what does it matter? If the average home is 1.2 million, remember, you're going to lose 10% if the interest rates go up 1%. So what does that mean? You're going to lose $120,000. So here's the thing is, November, December, whatever, when they were announcing that they will be starting to raise rates, that's when we fixed all of our rates because we knew that home prices would have to suffer because of that. It is the number one thing that's going to drive the prices up or down. So everyone thinks, well, you could buy a house many years ago, like my father, $50,000. Yeah, but he was paying 19% in interest. So the interest rate is good. It's going to really fluctuate things. The whole housing boom happened because we just kept on lowering rates every year forever. So what does it matter? But this is one of the only times I think that you have to listen to what the governments are saying to you. So the government said back then, we are going to be raising rates to fight inflation. That's the biggest story of the day. Of course they're going to do it. But moving forward from that, what are they going to say? They're now saying that they will keep raising it until it gets to 2% inflation. Right now, stated inflation, they're saying it's like 9%, 8%, whatever that is. But if you actually look at real inflation is actually probably closer to 16, 17%. Now, you guys, you see what's in the news, right? But it's in their best interest not to tell you what the real number is because you'd probably freak out. What is the real number? Well, you tell me. What are you paying for food? What are you paying for gas? Gas has doubled. A lot of foodstuffs have doubled. What else is there? There is price of used cars are up. Homes are up. And now that payments are dropping, people are freaking out a little bit because they're like, well, the payments are so high. That's when they freak out. So a lot of the first-time buyers are looking at properties, and properties are low on the price. So they're cheering this on. Yes, yes, yes. But what's crazy is that $1 million property before on payments is the same as a $750,000 house is now on payments, sometimes even less. So there are towns that have lost 40, 50%, which is absolutely crazy. So it's not about that minuscule difference between a 0.75 raise, a 1.25 raise. What is the difference? You know, this is the whole direction that they're going. It's just the speed that they're going, and they won't stop until it hits 2% inflation. Now, if history is any guide, this is what I always say, they will probably lower rates when the economy gets really bad. You think this is bad now? This is nothing. So right now, the interest rates have gone up a couple percent, historically still crazy low. From the 70s to 2000, or I don't know, it was always over 7%. So this is why you have to be buying properties at the right price, at the right time. That's the really big difference. So I think everyone has to be really, really careful in this type of environment. So if you're in a high appreciation, you're the CN Tower, if you guys are in a high appreciation area, we're hoping that prices will still go up and up and up. Now, what is the one tailwind that a place like Canada, the United States have? Well, the United States, they can bring in 1 million people a year. Canada some years brings in 1 million. We're 1/10 the size, 1/10. So what do they want to bring in this year? I think 400,000 people. If they bring in 400,000 people, they are all going to be living somewhere. Where do they live? Do they live in farmland? No. Usually 40% come to Toronto, another 40% will go to Vancouver, and the other 20% will disperse. And some of the other cities, Calgary, Montreal. So 40% of them come here. So 40%, 400,000, what is that? 160,000 people are going to come to Toronto, but we have no houses. So everybody who wants to make a direct link to what happened in 2007, 2008, 9, there was an abundance of properties. There was actually too many. Hey, you see all my sunscreen, eh? There was actually too many properties on the market. What is there today? There is actually I think 1.5 million short today, homes that we need to catch up. We only make 250,000 a year. So even at this pace, if no one had any babies, nobody grew up, no one moved out, no immigrants coming in, it would still take us 6 years to catch up. This could take us decades to catch up. So this is where you have to think longer term. And so remember, we always make money on appreciation and rental incomes. So we have to try to figure out where can we get that guaranteed rental income and get a little bit of appreciation, not be banking only on appreciation. So, you know, in Toronto where we live, these properties are places, of course, that everybody wants to live. They're high appreciation markets, but the rent isn't very, very good. What do you rent for? You normally rent for around 3% a year. So let's just say that a property was $1 million. 3% of that is $30,000. $30,000 a year in rent is what you're going to make. What would you expect somebody to make if they were renting from you? They generally have to make like $100,000 a year or something like that for it to be worth it for you to be renting to them. So how we normally say is we'll take the rent price and multiply it by 36. In the US, it's 40 times rent. Here is about 36 times rent. So a little bit different, but that's how to figure it out. And your credit score has to be around 700 for you to be able to get into a rental. So, I mean, lots of things happening. I think that it's around 92% of the time, the rate will always follow what the US do. The US happened to hit about 6 weeks before Canada. So I think the US was July 27th, something like that. And I think Canada's next one is September 6th. So we generally see what happens in the US and copycat. kind of weird that way. But Canada and the United States are intrinsically tied. We're really, really, really close. So it gives us an idea of where we're going to go. It's not a guarantee. But the United States also, when they put out their minutes, like the written testimonial, they're going to give you an idea of what's going to happen in the next market. So that's why they're waiting for it to come out tomorrow. I think it's going to be really, really interesting, right? We have some interesting things that are going to be happening in the market, but we need to be defensive. So I say you have to be defensive on anything. What does that mean? We need to always remember what Ray Dalio, Mr. Rogers, not the kids TV show, but Jim Rogers, the commodities investor, they usually say have 5 or 10% in gold and silver. You can buy silver right now at ridiculously cheap prices. Silver has dropped huge this year. Remember, how do you decide what to buy, gold or silver? The average I normally use is 70 to 1. So if silver is really cheap, that means it would be 90 ounces of silver to 1 ounce of gold. So if the number is higher than 70, I buy silver. If the number is lower than 70, I buy gold. And so that's how you accumulate that. How do you go into stocks for defensive stocks? Let's say that you are in Netflix, Google, Apple, highly volatile, but growth stocks. Then you might want to be adding something else to your portfolio that is defensive, meaning, let's say, utilities, something like that. I have had a stock for a lot of years called AWK, American Water Works. That stock is water. It's water. So you tell me, when are we not going to need water? I think they own the water pipes in Southern Ontario and Southern California. That's a defensive stock, right? What about property? I'm not saying that you only have one type of property. You should have several types of properties, right? So I always say you should have some in tier 1, which would be something like this, in the middle of the city with apartments. This is high growth. You also need to have a diversity of stocks. So what is that? Of homes. So what about I would call it Bs, which is getting into your suburbs. You should have something in the suburbs. You should also have something that is high cash flow. So if you're in Southern Ontario, look at something like Welland or something like that has high cash flow. Or start expanding your mind. What if you buy property in Portugal? We have some friends that bought Airbnbs in Portugal. What if you buy, sorry, it's really bright, you guys. What happens if you buy something in Alberta, Canada? What happens if you buy in Tennessee, the Florida Panhandle, in Texas, something like that. So remember, always look at the whole picture. You have to be buying some properties where the governments love landlords, and you're going to have high rents and lower appreciation. You got to mix it up, diversify, right? So just don't go into one thing. You have to diversify yourself. That's my biggest takeaway for you all in everything that you do, and start having some more safety plays. I've had a lot of questions these days coming out about permanent life insurance. So permanent life insurance is going to be between indexed universal life and whole life. It really is a different philosophy between the two. In whole life, you can kind of borrow money against your policy, but indexed universal life, they usually take all the money and reinvest it all instead of you having a chance to borrow it. Anyway, that's very complicated, but I can tell you that we use it in our company, but this is the cherry on top. Everyone, I think their mistake is they go to this first, but you should have the rest of your life kind of fit up. I put it like if you have a what's it called? Banana split. You have bananas, ice cream, the cream on top, and then a cherry. It's the cherry on top after you already have a cash flowing business. Your best defense when it's going to be coming to something like this, in these types of times, is to have a cash flowing business and be ruthless about it. You have to have that cash coming in, and then one of the last things you do is going to be setting up that. In the interim though, for 95% of people, those permanent life insurances are not for them. Just get term insurance and invest the rest, right? Term insurance is really only for kids. If you are going to have kids, you just want to make sure that they can have an okay life without you if you're one of the main breadwinners for the family, So get it when you have kids and ride that out. Anyways, so much, eh? You know what? What's happening in the world today, I think we're going to be in for an incredible fall. Fireworks that we've never seen before. So, we live in Canada, and we live in an area where, I got trees growing here. Trees, there's grass. And this is deceptive for people in North America, because the people in North America believe that we can grow food everywhere. But if you actually zoom out on Google Maps, or zoom out on and look at an agriculture map of the world, we grow a lot in North America. But if you look at a place like Australia, very little place to grow food. Or the whole Middle East, there's a lot of deserts that are there that are not good for growing. So Ukraine right now, Ukraine has 1/3 of the world's wheat production, or I don't know, something crazy like that, and 1/5 of the corn production when you look at Ukraine and Russia together. And now we're cutting that off of the global supply chain. So we're trying to grow in the north, but in the north, it's all going down. It's going to crap. So what's going to happen in September and October when we finally get these food numbers? When we get these food numbers that come in and we find out that it's extremely low. So we're going to be finding out that the wheat is going to be down, the corn is going to be down, and wheat supplies something like 20% of the global calories. So in certain places, Canada, the States, everyone is going gluten-free. They don't want to have any gluten. Okay, so if they have no gluten, that's fine, but a lot of the world needs this. So what happens, right? We keep asking, what's going to happen if that gets cut off? The price of wheat is going to continue to skyrocket. The price of corn is going to continue to skyrocket. And food, once we start cutting that off, they're going to start looking for everything else. So even though they don't grow oats there, well, as everyone's looking to an alternative flour or something, it's going to go up. And it's going to keep going up. So, we have to be cautious. Inflation is going to keep coming to hit you. So this is where I say, how do people prepare for something like that? It's not really the option of you to be able to influence government policy. Can you go to the government and say, tax me less? Can you go to them and say, I want you to slow down inflation? Of course, you can write a letter or something, but what's that ultimately going to do? Bupkis. But what you can do is increase your skills, and that's why I say it's the best ROI in your life. Go get those books, start reading books. My favorites this year have been the Peter Zian book and the Ray Dalio book. So those two books have been absolutely incredible. It kind of expands your mind, but as your skill set grows, you're going to be rewarded for that, So 5 years ago, we started reading books very, very regularly, right? And our skills went up, and so your income has to reflect that. So if you can do that, you're going to do a lot better. But food prices this September, October, we expect to have a lot of bad news around that. Fourth quarter, we're going to have a lot of the bullwhip effect that comes to fruition. So right now the stores are loaded with stuff. Did you see in LA, largest warehouse in North America? I don't even know if it's the world, but it's completely full for the first time. Also stores, when you go to stores, the aisles are stacked, the front sidewalks are stacked with stuff. So just play that out in your mind. What actually is going to happen? You know that the stuff is going to be there. The only way to sell it is to put it on massive discount sales. As soon as they do that, their fourth quarter numbers are going to be terrible. Everyone's waiting for Christmas buyers, but inflation is so hot that they can't deal with that. So if inflation is going to go to the moon, nobody can afford the stuff. They're not going to have any sales. They're going to actually post losses. If that happens, which they report in like February, what happens to their stocks? The stocks are going to drop. When the stocks drop, what happens to companies? Companies lay people off. You lay people off, they can't pay their mortgages. Can you see the doom loop that happens? And this happens over and over and over again. So this is probably what's going to happen. If this happens, which I think that the probability is the greatest for that. Remember, there are no certainties, just probabilities. But if that happens, the story of the day is no longer going to be inflation, but that everything is crashing into oblivion. Historically, what do the Federal Reserve do? What does the Central Bank of Canada do? They're going to start printing money again like crazy, just like they did in 2020. So remember that we have a different type of environment now than what we did in the past. If we go back to the 30s, they banned gold so that they get the gold so they can make some money. Okay, that's one thing. But then as we move forward, right, the 40s, we had the wars, 50s and 60s, they started spending money, a lot of money. So this is where there's this eternal war back and forth between gold standard and not the gold standard. Should you actually have the gold standard? That's what I mean. Everyone says yes, but I don't actually think so. In the 50s and 60s, they borrowed a lot of money, but for every $1 that they created out of thin air, they would get like $2.50 back of economic benefit. And they were doing that by letting the population be educated and getting them to universities for free. That's smart money. They're making great returns on it. The economy was booming. But what slowly started happening as we moved into the 90s and 2000s and so forth is we started to spend money just to get votes, not because it was really wise investments. So somehow over time it has just decreased and decreased. And so for every dollar that the government actually invents out of thin air through inflation, every dollar that they make now only gives like 5 cents of economic benefit. And they're in this doom loop because instead of investing like in education, which is permanent, now we invest it on consumables where we're just handing out checks and giving money to everybody left, right, and center. That's like a consumable. It's not pushing everybody in the economy forward. So as we shifted from making investments to consumerism, then it changed, right? So borrowing $1 to make $2.50, great deal. Borrowing $1 to make 5 cents, bad deal. And that's where we are now. So, and this isn't just Canada, the States, it doesn't really matter where it is. We now end up spending a lot more money in this doom loop. So what do we come back to? Being defensive on buying gold and silver, some Bitcoin and Ethereum, buy some stocks, buy good defensive, diversified real estate portfolio. And so once you read books, man, I'm telling you, I educated myself so much in my life and I love it. Because once you see something a different way, then you are never going to see it different again. So one of the comments we had on one of our lives, he was from Brazil. This morning, I got this long comment from somebody who was in South Africa. I love reading that. I love it. So the whole idea of the BRICS countries, Brazil, Russia, India, China, and South Africa pulling away because they have the commodities and trying to create their own reserve system. You know, so you can read about it from Canadian news and their point of view, but you could also read about it from the South African view and a Russian view and get your news sources from different places and find the truth. You know, when you go to court, you'll have the plaintiff and the defendant. And the judge is normally trying to hear their both extreme stories and find the truth somewhere in the middle. So do that when you get your news. Don't just read it all from one source with one political leaning one way or another. You want to try to get your news from all these different sources, and you are smart enough You're way smarter than you think to find that truth somewhere in the middle. How do we survive in a world where everyone's telling mistruths for their own personal gain? We diversify where we get our information from, because then you're going to be able to make much smarter decisions. At the end of the day, diversifying yourself to reduce your risk in real estate, stocks, gold and silver, for example, or whatever commodities you're going to invest in, it's an amazing idea for you. So, we love you guys. We're here for your health, wealth, and happiness. We put a lot of time into trying to spread good news and positive news to actually help people change. So if this provides you any help whatsoever, please remember, try to like and subscribe to this, and send it just to one person that you think you can help, because we want you guys to do well and to prosper. And remember, if you have any questions, you can leave them for me below. I try to get to everybody, but it's really tough, but I'll get back to you. We love you guys. Talk to you soon.